Hello and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Manganese. Before I introduce our speaker, please note to submit your questions in the question box to the left of the slides. All of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Dr. Matthew James, President and CEO of Manganese, which trades on the OTCQX Best Market under the symbol EUMNF and on the TSXV under the symbol EMN. Welcome, Dr. James.
Thank you very much. It's great to be here at the OTC Virtual Batteries Metals Conference to tell you about Manganese. As our standard forward-looking statement and risk notice. So what's manganese and where does it play its role in the critical metals of the battery? So manganese plays a role in the cathode. NMC, the M stands for manganese. It also plays a role in the LFP family of battery cathodes, and because they're adding manganese to improve the energy density and range of LFP, becoming LMFP. What's really interesting about manganese is it is the most affordable of the battery metals. As you can see on the right, a typical NMC 622 battery has about 20% manganese, but it only represents about 3% of the cost. And this is really important when battery makers are looking to reduce the cost of their batteries. When we're talking about manganese as well, it's important to understand that we're talking about high purity manganese. Most of the manganese that's mined in the world today, about 22 million tons, goes into the steel industry as ferroalloys. And even some higher purity material goes into specialty alloys, agriculture and primary batteries. But the very high purity manganese goes into the lithium ion batteries, and it needs to be very high purity because it's the impurities that cause safety issues in the batteries, hence why they need this ultra high purity manganese. So there are three tailwinds benefiting the high purity manganese market. The first is just the spectacular growth of the global EV market driving battery demand. The second is because of the affordability of manganese, there are a number of companies, particularly BASF and Umicore, who are developing manganese-rich chemistries to drive down the cost of the cathode, which is the most expensive part of the battery, and the battery is the most expensive component of an electric vehicle. So if you want to increase the penetration of EVs into those entry and mid-level cars, they have to drive down the cost of the car. And the best way to do that is to decrease the cost of the battery. So that development of manganese-rich chemistries, which can take the manganese from 20% in a 622 battery or 10% in an 811 battery, is going to 60 to 70% manganese in these manganese-rich chemistries. The third tailwind is the regulation. And Europe is driving the Critical Raw Materials Act, the establishment of battery passports, which is establishing high ESG credentials required in Europe. The US has introduced through the Inflation Reduction Act, or IRA, the EV tax credits. Both of these are driving development of EV markets in Europe and the USA. That has led to forecasts by external market analysts to drive demand for high purity manganese from about 100 to 150,000 tonnes currently to over 1 million tonnes by 2031. Unfortunately, the current supply is about meeting current demand, and there are insufficient projects in the pipeline to be able to meet that demand. And some of those, the level of certainty around those projects is also varies between probable, which are projects at feasibility study stage or expansions of existing producers. Possible, those ones are probably at a PEA stage, and then uncertain, which is recycling and other earlier stage projects. Because the market is imbalanced today, we haven't seen the price rises that we've seen for lithium, for example, as you can see on the right. However, once we get into that deficit period, we are expecting prices to rise dramatically. A little bit more on those regulations, because they are really changing the dynamics with customer conversations at the moment. The EU Critical Raw Materials Act has now set targets for how much of the critical raw materials need to be mined, processed, and recycled in Europe by 2030. The US Inflation Reduction Act has had a clarification just in March this year. On the 31st of March, the US Treasury Department introduced some clarification rulings that beginning in 2025, any vehicle that has battery raw materials extracted, processed, or recycled by a foreign entity of concern, being China, makes that battery ineligible for the tax credits. That's really changed the dynamics, because 95% plus of the high purity manganese is processed in China today. Most of the ore coming from Africa, being shipped to China, being processed there. However, by 2025, if you want to get access to these tax credits, it's unable to come from China. And in the US today, there is no high purity manganese being produced. In Europe, there's only a very, very small plant bringing in ore from Africa. So that takes us to our project. We have the only manganese resource in the EU, located in the Czech Republic, right in the heart of the European Union, and we have good support from EU institutions. The European Bank of Reconstruction and Development is our second largest shareholder. We also have plans to develop a project in the United States and Canada, which I can talk about later, and that will be the next step on building a multi-asset manganese company. So to become a critical battery metals supplier in Europe, we'll be reprocessing historical tailings. You can see the tailings here. This was from an old pyrite mine that was developed between 1950 and 1970. This is a polluting site at the moment. Sulfate-based pollution into the groundwater of about a ton of material every day. As we process this tailings, we'll be cleaning up the site, properly lining our tailings, which go back to where they came from, dry stamping and capping, which will stop that pollution. So not only are we creating a battery grade material from historical waste product, but we're actually cleaning up the site as we go. And that has led to a lot of local support for developing a mine in Europe. There's enough reserve in 27 million tonnes of this tailings for a 25-year mine life, producing just under 50,000 tonnes of manganese metal equivalent product every year. We've secured land on the other side of the road and rail, as you can see there. And not only are we cleaning up the site, but we have exceptional ESG benefits because we're using 100% renewable power. We have an MOU for power from Statkraft, one of the largest renewable power suppliers in Europe. We'll also be using industrial wastewater from a neighbouring power plant for processed makeup water. The support from the local communities I've spoken about, but also from the Czech government, because we're not only creating local jobs, but also benefiting the Czech government with 1.5 billion of corporate tax and royalties over the life of the project. And in the Czech Republic, 1/3 of those royalties flow back down to the local communities. This chart shows our CO2 footprint per ton of product produced. And that renewable power that we have from Statkraft means that our CO2 footprint is 1/3 of the incumbent industry in China today. This is really important for our customer base because as they're looking to build clean vehicles, they need a clean source of raw materials to do that. We now have our processing demonstration plant on site in the Czech Republic. The process is the standard process that's used in China. We're just wrapping a lot tighter environmental controls around the process. So we excavate the ore. It's already finely ground from the previous process. So we just have to put it into a slurry and feed it into the plant. The first step is a magnetic separation where we reject over 60% of the mass and more than double the grade of the product. We then go into a standard leaching and purification process to produce a solution that then goes into an electrowinning to produce a metal flake that you can see here. That is a purification step in its own right. We can then take that metal flake and go to the last stage, which is dissolution and crystallization to produce a high purity manganese sulfate, which is used by the cathode active material makers who supply the battery companies. That metal intermediate product gives us a number of advantages. We can relocate that closer to the end user and do the dissolution there. There are companies that are looking to produce other manganese products, and they can use the metal as the source of that material. There are also companies that are looking to produce the cathode active material directly from the metal itself, particularly Nano One's metal to CAM one-pot process. So metal gives us a good deal of flexibility in our strategy. I mentioned the demonstration plant is on site. That is now going through final acceptance testing. We have produced metal on spec at 99.9%, and we're just finalizing the dissolution and crystallization step. And once we have that high purity manganese sulfate, we'll send that to an external lab for confirmation that that also meets our specifications. This demonstration plant on site will be able to provide hundreds of kilos of samples to customers who've already received pilot plant samples of a couple of kilos. So it's the next stage in qualification of the product. We published our feasibility study in July last year. The project has a net present value of 1.3 billion post-tax on our base case with a 4-year payback. The capital cost of the plant is about $750 million, but it's a robust project generating strong revenues and good margins. As I mentioned, the price is forecast to increase. Tetra Tech, who did our feasibility study, took a risk-adjusted approach to pricing and held it flat from 2031 rather than use the CPM price forecast, which continued to increase as the product moves into that deficit period. Our timeline is in this year to complete our permitting, which is the EIA. That was submitted to the Department of Environment in the Czech Republic in December last year. That's expected to take 6 months to go through approvals. So we're expecting that in June, July this year. We can then apply for our land planning and construction permits, which will take about another 6 months. We're about to appoint our EPCM contractor and start our FEED engineering. Again, that will take through about 9 months through to the end of 2023. We already have some customer term sheets, and we'll be moving those to offtake contracts, and then also putting together our project financing throughout this year as well. That will take us all to a final investment decision around 2024 to then move into construction. It's about a 2.5-year build and an 18-month ramp up. So production in 2027. Our project finance strategy is progressing well. As I mentioned, we have EBRD as our second largest shareholder. That's the European Bank of Reconstruction and Development. Both the EBRD and the European Investment Bank want to be sizable debt providers for the project, and we've appointed Stifel as our debt advisor. We've also speaking to export credit agencies, ESG funds and commercial banks. The debt side is looking very robust. About 65% of the project financing will come from that debt, leaving 35% from equity. We've appointed BMO out of New York to help us with a strategic investment at the project level, targeting the OEMs. This is the same team that did the Lithium Americas GM deal fairly recently. We're looking to sell down 10 to 20% of the project at a project level valuation. The remaining equity requirements would come through a private offering, a public offering, and we've mandated Canaccord to help us with that stage of the financing, which will become later this year. As I mentioned, we've signed our first offtake contract, also term sheet, moving to offtake contract now. It's really interesting. We have agreed a Western price for the high purity manganese sulfate. That's very different to the price in China because of quality, transport, and just having that local source and secure supply. It also correlates to the CO2 footprint, as I mentioned before, and it has a floor price to meet our banking debt covenants, no ceiling price, so we can benefit from upside of price movement. It's an 8-year tenure, and now we are moving other customers into those term sheet processes, and that's progressing very well, particularly since the clarification of the IRA subsidy mechanisms and needing non-Chinese source of supply. I mentioned North America. It's a growing market just as Europe is, and we want to access that market. And the way we're doing that is we've secured a parcel of land at Bécancour in Quebec. Here we plan to take some of that metal that I mentioned earlier, bring it across to Canada and do the dissolution in this, what is becoming a battery materials industrial park. GM POSCO have already broken ground on their PCAM CAM plant. BASF have land here, and a third CAM producer is to be announced. And you also have all the raw materials here: lithium, cobalt, nickel, graphite plants being built, and manganese completes the requirements for those CAM producers. It's got excellent infrastructure, clean energy at very low prices compared to internationally, and also a very supportive government with investment potential from both Investment Quebec and Invest in Canada. So we've just completed a scoping study on this site and now moving forward to RFQs for the full feasibility study. So those are the key catalysts for the company in 2023. To finish the commissioning of the demonstration plant and to produce samples for customers, to appoint our EPCM contractor and complete the front-end engineering design throughout 2023, to finalise land access agreements. We've done 3 of 5 to date. 2 are in commercial negotiations, progressing well. Complete land rezoning. One municipality has already completed that. The second one has approved the process and is just going through that process and expected in Q2 or Q3 this year. And then we can submit, once we receive the EIA approvals, submit our land planning permit. I've walked through the appointment of our project equity and debt advisors, and we're now also progressing on our offtake contracts and expect to announce more offtake contracts in the coming months. And we've now completed the North American scoping study, so moving forward to the feasibility study there. So that's Euro-Manganese, and I'm happy to take any questions that you may have. So the first question we've got is, what is the current source or countries of high-grade manganese? So whilst there's not a shortage of ore, which mainly comes from Africa and Australia, the high-grade manganese is all predominantly processed in China. There's a small amount of high-grade metal that's produced in South Africa. There's a very, very small plant in Europe that produces a few thousand tons, bringing ore in from Africa. But 95+% of high purity manganese is made in China. And that's a real issue for the new clarification of the IRA regulations that require critical raw materials to come from or not to come from a foreign entity of concern, and China is classified as a foreign entity of concern. So the second question is, what are your capital needs for H2 2023, H1 2024 initiatives? So we have $18 million Canadian in the bank at our last announced closed quarter. We have sufficient money to do the needs for the pilot plant, the feasibility studies in North America, to move forward in our start of our feed engineering. So what we're looking at is and corporate costs through to the end of the year, by which time the financing which I spoke about before would come into play. Another question is, so what is slowing your progress to mine and plant build out? Permits or money? So I think I've walked through the timing of the permits. We are progressing with the environmental permit and then move into the land planning and construction permit. Those are well documented processes in the Czech Republic. And in terms of money, again, we've laid out our financing strategy that go hand in hand with the permitting process and the offtake that we need to underpin the bank finance debt. So that's what 2023 is all about. Are you being compensated for the cleanup work at Karlovica? It would be good if we were. We are cleaning up an environmental polluting site. At this point in time, no, but the project is robust just from the production of the high purity manganese. Another question is, what would be a catalyst to raise the market value before construction is completed? Great question. I think we see key catalysts are announcing more offtake contracts. I think that would certainly one thing that the market is looking for, and that is progressing well. We expect to announce some more contracts in the coming months. The project finance debt, putting that in place and getting clarity on just how we can reach that 65% gearing, I think will be another catalyst. Appointing the EPCM contractor and completing the FEED engineering, that's another catalyst before construction. And then putting in the equity finance I think getting in that strategic investor at the project level. If we get, our plan is, and we're targeting, and that process is underway, to get an OEM in the project. That would be a real validation of the company, the project, and the product, and that would be a real catalyst for the stock. So those are the questions that we have. The information, contact information is shown here. If you have any further questions, please feel free to contact the company. There's an email address there at info@mn25.ca. Happy to take questions through that info mailbox as well. So if there are no further questions, it just leaves me to thank you for your attention. It's been great to be part of this virtual conference.